Gotta make moves and hip hop is what's up, son? What's up, son? Gotta make moves and hip hop is what's up, son? Gotta make moves and hip hop is what's up, son? Gotta make moves and hip hop is
Yo, guys, how we doing?
what's up, son?
See, we should be live. How we doing? Yes, we're live. Boom. Hello. How we doing, guys? If you let me know you're here, that'd be swell. Another week, another Monday. I'm just going to see if this chat thing works. I still have not sorted that out. It's very bad. Okay. All right, how we doing? I'm just going to dive right in. I think there are people here. It's around 60 odd people are here apparently. And we're live on YouTube. We're also live on Twitch. You can just search TRADERMATT on Twitch if you prefer Twitch. I just have a multi-stream, so I've just added it, but I don't really use it that much. So let's kick this off. Let's talk about what we're going to be talking about first of all, and then go from there. To start with, obviously you'll see that I am now partnered with Hyrotrader. They are a crypto prop firm, and I've done a fair bit of research on them. I've done some testing with them, and I've always wanted to align with a firm where some key things are important to me. First of all, the price has to be good. I feel like a lot of crypto prop firms are quite expensive, probably over double the market rate, and Hyrotrader have good prices. They have to have simple rules, and Hyrotrader have very simple rules. You can find them on their website, but there's no silly rules like trading drawdowns and that kind of stuff, which I think is really bad, and a lot of firms use that and catch people out. So they have none of that. Very simple rules. I should have been more prepared to say what they are because I can't remember exactly, but it's something like 10% profit target, and then you've got your 5% max risk drawdown per day, and then 8 or 10% is the account drawdown before you lose the account. I'm a little bit unprepared today because I've had a lot going on, so I will be a little bit more professional going forward, but they also are very transparent and reliable with payouts, which is one of the main things. You can see all of their team on social media as well. If you go onto Hyrotrader on X, you'll see their entire teams on there. I've had about I feel like at least 80% of their team messaging me trying to get me on board with them for a long time now. I think I've gone through all of their BDs, but I'm very happy to align with them, and it's hopefully with the view of a long-term partnership that I want to do over the coming bull market. So it's a company which hopefully I'll also be able to have some input on and improve some of their services if it needs it over time. We shall see. So if you want to start up with them, you get 10% off your prop firm challenges using the code TRADERMATT. There is also going to be a link in the description and in the replies on X. So if you go over to hyrotrader.com and sign up to a challenge, you can also do a little trial for free as well, just to get used to their systems. You can integrate Bybit with them. And then, yeah, when you're ready for the challenge, or you can dive straight in, use code TRADERMATT. So on the agenda for our live stream tonight, we're going to be doing as usual, running through Bitcoin, Ethereum, Solana, and Hyperliquid, usual kind of market analysis and trade plans for probably the next couple of days or so. Obviously, I had the video this morning outlining a lot of plans and to get short, and I've been short since last week, and I will talk about that trade as well. So we'll go into that a little bit more detail. I'll be doing chart requests and Q&A for the second section. If anyone's got any charts they want me to look at, if you have something, let me know in the comments now or in the chat, so I can get to that pretty quick when we move over to the next section, or just do it, when it comes up. It's up to you. Or if you've got any questions related to my trading or my lifestyle or anything, you can also include that, and then I will get to those questions. The third section is going to be about how I use risk at different supply and demand zones. So if you have a swing in price, and let's say you've got 3 different resistance levels that you can look for shorts on, I'll use different risk at each of those levels. So I'll describe how I do that. And then lastly, how to use prop firms in your trading portfolio. Obviously, it's a bit of a pertinent subject since I've now partnered with Hyrotrader. But I have been trading prop firms alongside my own capital for, about 6 years now in the Forex space. And that Forex space eventually started adding crypto prop firms, crypto charts and coins. So yeah, I feel like in the next bull market, prop firms are going to be the way to go. I feel like more people are going to use them and not put their capital at risk, and have liquidation events and stuff, which just wipes out people. I feel like more people are going to learn to trade the bull market better and get decent payouts. And I think, I'm very happy to align with Hyrotrader because of that. So let's get into it. Let's start talking about what's going on. So, full calendars here. Yo, Mario says you look a little tanned. I went to the beach this weekend. It we had 30-degree weather in the UK all of last week, and then my mate, we'd been planned it for about a month. He was coming on Saturday, he came on Friday, and we went to the beach on Saturday, and it was grey as fuck. But then we went out afterwards, and then it got really sunny, sort of like late afternoon, and I think I got pretty burned while sitting there waiting for our burger and ice cream for about an hour and a half. So yeah, could also just be the soft light in this room. Right, so let's get into it. I need to get the right window open. Here we go. Bitcoin on the 4-hourly time frame. So hopefully you've seen the video from this morning, which is just outlined all the levels. I also put an article up, and if you like that kind of format, don't forget to hit subscribe on X. I do them daily. Do market reviews in the same format as you saw on my profile this morning, and then the articles as well. And we all got short last week when everyone was hyper bullish, and that is up here. So if we start from the daily, I will just do a quick refresher of the levels, and then we can go from there, because stuff has happened today which is moving quite nicely. So we had the range that we were in from February, where we had the high up here at about 72K. And then you can use the wick low down here at about 60K. I had been using this candle low rather than the wick low at about 62.8K. No real reason for that other than aesthetically it looked a little bit better, but it doesn't really make much difference. Roundabouts this area, we're seeing that a range has formed at this low, and I'm just using that first retrace wick, takes the level out, retraces, and then comes back down. I'm just using that high at 64K and then the low about 59K. And you can see basically price comes down, fakes the high, comes down to the lows, fakes the low, comes up to the high, tests the high again, and is now in the process of potentially making a lower low below last week's lows. So I would say, based on this, it is going to be traveling down to the range low at about 59K. So that would be the first target for this move. And then if it breaks below that level and then holds the low as resistance, I'm expecting it to come down to 50K, which has been my target for many moons now, many months. So it'd be very nice to see that come down and hit over the next week or two, ideally tomorrow. But I very much doubt we're going to get a big red candle like that. So on H4, where we have a little bit more of a picture, I'm just going to remove this range high because it gets quite messy. We have this really big wick here, and even though I don't really class this as the level that I was interested in, I actually had this level down here, which is where the sell-off kicked in to create the lows, and price retraces all the way back up to it. Wicks it, closes above it, so it's all kind of part of the same chain. So I was just looking for a range roundabouts in this area in order to short Bitcoin. So it happened, and if we go down to the hourly, we'll be able to see it a lot cleaner. It had come down, and I'd shorted down here as well, and it just missed my stop loss late on last week. We had a bit of a laugh about that in Discord. And then just managed over the weekend to hold the highs, and then it started closing low. So at this high here, I wanted to see price range, and you can see we had this 3-4 drive channel last week, breaks down below it, comes up to retest it, and then this is where the real entry was. Even though I was looking here and I got a trade here, I added once we had this price action. So you can see low volume over the weekend, drops to the range low, drops to the range high, low, high, stays at the high, wicks the low, wicks the high, and then nukes through the low. So in the same way that I just said on the daily time frame that I expect it now to hit the range low at about 59K, it's because I see things like this all the time where price at the high of the range, if it's going to break through into the range, it's going to hit the other extreme, which is what it does. And then when it hits this extreme, it goes back to the previous extreme and then just keeps doing it until eventually it breaks it, and then we get the impulse down. So that's why I'm expecting price to go back down to 59K. And I've got an hourly entry thanks to this range here, and now just sitting comfortably in short. So now that it's made 2 lower lows, and this is now the 3rd lower low, I've moved my stop to break even because I don't really expect it to come back up here, especially after now it's taken out these lows. This is where I thought it was going to go last week, but then we ended up putting this reversal pattern in, and I've been saying once it had broken up, this is where we'll see on a lower time frame the entire move had been put in. So once it gets broken, the market structure changes. This was the attempt to push up to new highs, fails, and now we have a lower low. So we have to be looking for shorts this week. I don't know why people haven't been anyway, but that's their problem. So down here was the end of the chain. You can see, even though this was on H1, the clean level, this is all on the lower time frame, a reaction to this level, which is where we had this range, breaks out of it, and then creates this entire swing. So this level has now been taken out. So if I'm looking on the hourly for somewhere where I'd like it to retrace to, I would look for this here, which is where the sell-off just created this new low, but really the end of the chain is up here. Now, when I'm looking for trend continuations, I want the shallow part of the level. So if it does retrace, I'd be looking here at about 62.8K to add. If it comes up higher, that's fine. But the danger of waiting for higher in situations like this is that you might not get it because you've got a clean and strong level just below it. But I'm not quite sure this is going to retrace up there tonight based on what we're seeing. Someone says, could you check the link later, Matt? Ericsson, which link is that, mate? So I think we're just going to be dropping. And in the same way that we had this sort of end of chain here, I feel like we've got the same sort of thing here. And it's at that previous higher time frame range low. So it'd be really targeting this move to drop down to 59K. And I'd like to see that really overnight. I'd like to see it wake up tomorrow and it drop down there. The volume is quite strong. The sell-off is quite strong. It's taking out key levels. And then once it starts taking out this low here, about 61K, I think it should have no problem moving all the way down to that range low. I would expect turbulence down here at 59.6K because, as I said, this has been the key level that has pushed us all the way up to the highs and has held us up since the beginning of the month. But all those people that went long really don't want to see this round trip within the same month. So I feel like if it does, we're going to see a lot of longs puke and then this drop down further and then eventually down to my 50K target. If we look on the 4-hourly time frame, we can see that this low is the low. It's been tested multiple times. And then from there, we've pushed up so far, because I wouldn't say we've created a lower low on this time frame until we break up below that 61K level. But it looks like a lower high, in which case I would suspect it will take out these lows and create a lower low and then seek out the deep liquidity level at about 50K, which is, again, ultimately where I'm looking to TP on these trades. But this is Bitcoin, and what it will probably do is take out the lows and then come back up and do something shit like this and then make us all wait and chop for more weeks, which would be really frustrating. So I think for the best thing for the market is for this to just shit its pants and then drop down to the range low and then ultimately drop below it, because then it will have everyone not fighting over whether we're at the bottom or not. Everyone will start losing hope down at 50K. But it's at that point where I want to start dollar cost averaging in. I want to start buying Bitcoin. I want to close all of my shorts. I think it's way better now that we have a potential lower high here. I think that's the kind of things to be looking for. If we end up coming down to 50K, for example, and then bouncing, I don't want to be short in here back down to low. I think that's it then. I think it's just not really worth it, especially since I've been short in the market since 110K. So for me, I just want to see it come down. I know I'm very confident that it will, but you know, I was very confident at this point, and then it retraces like this. It might come and do the same thing. That actually looks more plausible, but we will wait and see. If you're not in a position and you're looking to get into a position, I would say wait for this low to get taken out and then look for a retrace. And then any retrace, you look for signs of exhaustion similar to this range. Just wait for price to move sideways, maybe fake the highs and then come down and then look for shorts like that. But I wouldn't be FOMOing in because we're right at support. And this was key support because it tried to create a new high. It didn't create a new high. And the fact that it didn't create a new high and is now in the process of creating lower lows, it's a very bearish sign. But I would wait for that to be taken out, and then I'd look for a retrace either to one of these two levels, or it may do it just somewhere before and then continue to break down if the market is weak enough. But I just want to see this start heading down to like 59K now as soon as possible, and then going from there. I'm personally not looking for long, so I'm not going to sit here and say here's a long scenario. I don't think that's wise. And this is why I haven't been longing like moves like this and like this, because I just didn't trust how far they could go. I put my long hat on when I expected this move to continue south, and it didn't. And when it started moving like this, and after the exhaustion of the selling, I knew it was going to put an I knew it was going to put a swing up in. I had the deepest retrace level, which we looked at with my subscribers, We've been looking at this level for a while now. I just didn't fancy longs. I tried to put the hat on to take a long, but I didn't trust where it would be moving up to. I didn't know if it was going to be here or here. And then you can see the very low volume candles that built and didn't really go anywhere. So it's not the type of thing that I want to be entering. This is what I want to be entering. This is where we get the consolidation at a key level and then bursting out after faking highs, like the perfect entry. That was an amazing candle. And I'm a bit annoyed I didn't get that one. I should have set my automated system up, but I was already in position, so it wasn't too bad. So yeah, that's kind of Bitcoin. Let me know your thoughts. What do you guys think? Could you check the link later, Matt? Someone says. Eric soon. Which link, mate? On YouTube. No one's got any questions on that. That's fine. So let's look at Ethereum. All right. You can already see on the lower time frames what's happening, but very similar to Bitcoin. This looks like it's going to shit its pants. We have the big range low here from earlier in the year, breaks it, and now we're ranging at the lows, pushes up, doesn't quite make it to the lower time frame supply, comes back down to the range low, and at the range low comes back up to the range high, fakes it, and now if it breaks back below the range high, I'm expecting it to go to the range low. But as we're already in a downtrend, and a very strong downtrend, I would imagine that the next go of it is going to come down to about 1400. I would expect it just to keep going from there. Now, if we just put everything back that was there from the lower time frames, we had this big high here. This is where price retraces and then the sell-off kicks in to come down to hit the range low. So at this point, I'm looking for a range to form, and we have a very clean range, and it's just taken a while to form. So we have it up like this. You can see how it's interacting with the range, deviates below it, comes right back up to the highs, fakes the high, back into the range, fakes the high, goes to go to push up, and then rips back down into the middle of the range and is now closing back below it. So I'm expecting this to hold now and continue south. The key area is 1690. This is the decision point where the buying took place to come up and take out that key high. So we know that this is holding all the current price and action up. And if it round trips to it, I would expect it to break through again, because we're in a higher time frame downtrend. And I would expect, considering how it hasn't made a new high above this point, that's a bearish sign. If it took it out and then you're looking at a retrace to get long, if it had like come up here and done that, but it hasn't. It's just technically made a lower high. So I'm expecting lower lows and I'm expecting it to go lower. Technically, for my strategy, this is now on this time frame a short entry because it's broken below the range low after taking the high, and we have a second breakout to the downside. Not totally convinced of it just yet because obviously, as you can see, it's farting around just below it. Technically, it is a short trigger. But if I'm looking to get into Ethereum, I'd be looking for a retrace back up to the supply zone that's sort of sitting in the middle of this range. So if it's taken out this level and if it comes back up to about 1780 to 1790, you can look for a retrace to come back down. Or if it just nukes, I'd wait for this level to break and then get in on a retrace to shoot back down. It may even come down and then just put in a range and then ultimately a continuation pattern. So that's kind of how I'm looking at Ethereum. Again, I'm not really looking long. I don't think the risk reward is there for longs unless it comes down here and manages to hold it. I would long down there, but I just don't think the market is favoring longs at the moment, particularly at the top of the swings. So yeah, that's kind of how I'm looking at Ethereum. And one thing to note as well, if you're trading ranges like this, these sort of top ranges, very wick-off distribution-y. You get the range, you get the deviation below the range, it comes back up to the highs after looking like it's going to go at this point, right? And then it looks like it's going to go the other way and then rips down. Seen this exact behavior before, and it was the exact way that I shorted Ethereum with everyone back when it was it up here? Yes, it was up here. Yeah, I'm on H4, it confused me then. We had this range, and you can see very similar behavior, just moves in and out the range, deviates below as if it's going to go, comes right back up to the highs, and then goes. So it takes a little while to build. This is on H4, but if I go to H1, you can see very similar behavior where it's just building a range, looks to go, but deviates out, comes back up to the highs, and then sends back lower. I'm expecting it to break down. I'm expecting it to break down soon. I'd rather see it break down sooner rather than later, because then, you know, the more it chops around, it's boring. So yeah, nice level there, about 1790. That if I was you, I'd look for retraces, maybe down on M15 and look to get short. I'll probably be looking to add a short there if it does it. So yeah, key levels all marked, key range, decent area to look for a retrace. If it does push up above it, then again, I'm not looking long because we are just below key resistance. The only way I'd entertain a long is if it takes that out and then it retraces back to a key level and then look to continue the trend. And that would look good if this all builds up from here and then takes it out, because this would look like a massive bear trap, and then you know, it's going to head for higher prices. So we'll see, but fairly confident that this should be dropping. Solana next. Any questions on Ethereum? Any questions on Bitcoin? Right, let's make this clean and then we'll start again. So here's the range that I've been focusing on for basically all year since February. It's got the low of the candle rather than the wick, although again, you can use the wick, but it's a little bit cleaner to use it like this. You can see the behavior in the range, fakes the high, hits the low, fakes the high, breaks down below the low, comes right up to the mid-range and is now breaking back down below that range low. So if I just add all the noise back on, and if I go down to H4, you can see this area is a compressed area where price sells off out of to come and break the range low. So we know from this sell-off, it created this low, taking out a major support level. So at this area, or I was looking also at the high of the compression, always at the extremes, as I always teach. You either want the shallow part, or if it breaks the shallow part, it's likely to be going to the deeper part. And then exactly the same thing as ever. Just got a clean range at that extreme, wicks the high, and then closes below. And then we have the key area here, which is the decision point where the buying took place to take out this high, and it bounces from it, but it puts in a lower high and is now broken as a lower low. So I'm expecting any lower highs to be shorted and to send that down to lower lows. So if you aren't in a position, you can look for retraces to get short, in my opinion. At this key level, we have a range here. Again, just following what it's doing within the range, uses it as support after flipping it, comes back down, uses it as support, breaks through and closes through the low, retraces back up to the high, down to the low, wicks the high, and then nukes below the low. This is a bearish trigger to go short. Sitting on the range low, we have a supply zone where this low has now been created from. So I'd be looking, if I'm not in a position, for a retrace to that point and then looking to send this lower. It may even come up a little bit higher for that range, but anywhere within this range, I'd be looking for it to come up to and retrace to and then send back down. So I feel like any move up is to be shorted, and considering how everything's all gone quiet on the front of certain coins that were getting shilled over the past few weeks, this was always going to come back down, and I feel like it's going to come back down. And the bottom of that chain is down here at about $66, so that would be my target for a short. Although I feel like if it comes down there, it's ultimately going to be coming down to my $50 target. I think a lot of people, especially those that got sort of led by the Pied Piper into a meme coin over the past couple of weeks, 3 weeks or so, I feel like they'll puke positions as we start coming lower, and then we'll get a capitulation, and that's what I'm looking out for. I'm already short and took a short on the breakdown of this, and I've added a small position on the breakdown of this, so I would just like to see it go. Bulls will tell you that it's a low now, it's going to start creating higher highs and pushing up. I don't think it's there, but if it does start breaking above this range, if it does start ranging again and breaking to the upside, the complete inverse of this, then I would say, okay, we're going much higher after all. But that would be my invalidation would be above sort of this high at about $78. But then I'd want to see it creating new highs and higher lows in order to chase that. So I feel like this is coming down here, back down to $66, a place where we've visited many times before. And I think the next time it should go through it. So yeah, very clean price action on Solana. Solana is super clean to trade, and I hope for the next cycle it stays like this, because it puts in really like nice looking levels, and it's just like a trader's dream really. I've really enjoyed shorting this. I just want it to go down to my $50 target now, because I'm still in a lot of positions. Did anyone long Solana this month? Did anyone long certain meme coins as well? Okay, Hyperliquid. Just checking the chat. Clean, let's go. Yo, D. Christensen. So, Hyperliquid on the daily time frame, we had the previous all-time high. We have a continuation level where it takes it out, reloads, and then sends higher. And then we have a very clean and obvious range high. So this is my range high and this is my range low. Price is now in the middle of this range, and I'm expecting it to come down to the range low. At this point, back down at the range low, I feel like the liquidity has been taken out of it and it's pushed up, and it failed to make any meaningful move to the upside, wicks the highs, and then on a retrace to round trip that move, I feel like it's going to come lower. In which case, if it does, the next area, this is all one big chain, would be my next target at about $26. And that is heresy, if I say that online. People really don't like that, especially with how bullish things have been. But the narrative for Hyperliquid is just cooling off a little bit. There was that stuff of Lighter. Was it Lighter? And there's Robin Hood, and people just kind of realizing, okay, maybe there's other places to trade. But I still think this is going to be a really good coin to get into for the next bull market. So if you're holding it from lower, yeah, obviously you're not going to want it to go lower. But if you're not in it, like I'm not in it, I want it to go as low as possible. I want to hold it for the next 3-4 years. So if it comes down to about $26, that would be a great buy. Personally, feel like it would be even better if it comes down to the absolute origin of this entire move up at about $16. But again, I'll get absolutely destroyed for saying that. I already got destroyed for saying that, and I was only fucking around. But it's logical on the chart. And you would have seen other coins doing a minus 80% in a bear market is not unheard of over the years. But from what is a more achievable target, I have that about $26. But first we have to get through this barrier. This is a clean impulse up. This is all one big chain. So if it doesn't bounce at the bottom here at about $40, which is where the buying took place to put in the new all-time high, that's a clean level to also buy at. $40, but if that breaks, then we have $26. So I would love that. I would absolutely love that, personally. On H4, let's do H4. So again, we have a few things to follow in order to get our story. So if we look at the push to the all-time high, we come down and we have this level here, which is where the buying took place to put that swing in. And it's important because we had this high, we drop, retrace, and then this is where the sell-off kicks in and hits that low. So on a retake, and takes the level out as well, right? So when it comes back up, it should be coming back down, but it doesn't. And this is where the buying fuels that move up to change the trend and change the market structure. But then on a break of it, a retest of it, again, it should be bullish, but it doesn't. It breaks through it. We have at this point the sell-off that kicked in to create this low. So we know there's good liquidity here. And on a retest of it, I want to see a range form, which is exactly what we've got. The problem with all of this is like it's one big area of compression. And this level is more a reaction to this level. And then again, you can just keep going up and up and up with that one. So I've been a little bit unsure. We've had this high and then this high, but ultimately we've had a range form at these highs and break down to the downside. So very key. And it's better to trade that on H4, in my opinion, just because it's a little bit cleaner. But if we go down to the hourly, we can see price comes down, hits the range, forms the range low, hits the high, hits the low, hits the high, comes to mid-range, hits the high, and then nukes back down below the low and is now ranging and created a supply zone. It is also taken out this level here, and you can see we had a little bit of turbulence here, which is where the buying took place. We have an impulse up, and then we have the cluster of compression here, and then it impulses up. So that's a key area, and that's been taken out. And that now, for me, has paved the way down to $54 because it's taken out the last key level. And these lows are all reactions to this. So I feel like we're going to come all the way down again. Makes sense from a supply and demand perspective. We have this supply zone here sitting on the break of this clean demand. That's exactly where you want to start looking for reversals from on a retrace. So if it does come back up there, I'll be looking for an add either there, you get the range and then you get the drop, or it might come higher back into the previous supply zone and then get your reversal pattern to send back down. And like I said, targeting about $54. But the bullish case, I'm not looking bullish until it would take out this supply zone and then start reclaiming the range, and then you've got an obvious target there. But you've got very big levels between that. So I don't know why you would expect longs here. So I'd just be aligning with the downside of the force, and look for shorts on retraces to key levels. But ultimately, I think this is going to be heading down to about $54. All right. Any questions? Any chart requests? Or any questions about life in general and trading in general, my experience with trading? The next section is for that. I'm just going to have some water and then we'll get into it. Could you the link? Okay, Chainlink. What's the ticker? I'll just type in Chainlink. But if you've got the better ticker, Dan says post it. I'm guessing you're talking about $16 for Hyperliquid. I've already done it once. If we start creating a lower low, then I'll do it again. Yeah. All right. Okay, so I'll do Chainlink and then we'll move on. Maybe we can have a quick stream tonight. Chainlink. Let's do Binance, I guess. Yeah, okay. Yeah. All right. I mean, first of all, the thing I'm going to say is that it's at lows. So I don't need to do a huge amount of technical analysis on this because it's at a very low point. And I feel like with things like this, if you're still bullish on this, it's coming up to a pretty nice area to start buying from, right? It's down about 76%. So this seems to be like, I mean, just look at this big demand zone. It goes sideways for entire bear market or accumulation for the next cycle in 2023, and then it finally pushes up, and now it's reclaiming, or sorry, retraced down to it. I'd just be wary if I'm buying. If I'm looking to buy this, I would just be wary that it's going to come down and take out the lows and go even lower. I would prefer to have, if we say we have a range here, you can see how it's ranging, fakes the highs, breaks the low, and is now using the range low as resistance. So I would expect it to drop more. But if it comes back above the range and then starts holding and pushing up, maybe that's your entry. But down here in general, if you believe that Chainlink is going to be coming back up to lofty heights of $28 to $30 in the next cycle, then this is a good place to look, or even up here. But from this chart, we have a big cycle, massive accumulation, and then it struggles and it doesn't get very far compared to the previous time. Comes down, lower high, spikes, and I just feel like this is on a dribble down into the abyss. It's up to you. Like this is a perfect example of why I don't look at altcoins, or why I don't put much hope in older altcoins. There are like altcoins which I loved back in the day. Let's look at Verge, for example. Is it Verge? Not Verge. I want to look at VeChain. Like I was like a massive VeChain shill back in like 2018 to all my mates because I really loved it. Unfortunately, I didn't hold it through all to this, which was really dumb. This is like they obviously got into the UFC and everything. Oh, that's painful. I was holding a lot of it back in like March 2018, but I lost my conviction. But this is again a perfect example of why I'm no longer interested. Even if you see it in like the UFC, right? You've just got your one big cycle, lower high, dribbles down, has like absolutely no interest. We have one last pump up, and then it's just a slow dribble down into the abyss. So I feel like coins like this and other altcoins from yesteryear have had their time now. I just don't think the interest is in it, other than like what we've seen with Solana recently, where a gang of influencers start shilling it to tens of millions of followers. That's the only way things like this are gonna come back. And there's so many coins now. There are so many altcoins. There are so many meme coins, and there's just gonna be a plethora of new things coming out over the next few years. That stuff like this has just kind of had its heyday. This was really exciting back in the day with crypto because these are the kind of things which we thought were going to change the world, and it ultimately just ended up being a massive pump and dump. But hey, there's crypto, huh? I have a comment that's from Twitch and it's a fucking bot. Dan says, yeah, $16 in hype. So yeah, that's how I would look at that. That's how I would look at Chainlink. I would just look at through it in the same lens of that, to be honest. I feel like if you've just got a bit of cash to throw at it and hit and hope it and forget about it, then fine down here. But I wouldn't be going to put like 50% of my portfolio in this. A little bit of cash, why not? This is personally speaking, this is not financial advice. Personally, I wouldn't touch it. But if I was, I'd just be putting like a couple £100 in, just hoping for the best, and finding better opportunities, because there's going to be a ton of better opportunities as things start to build over the next year. So sorry if I popped your bubble there, but yeah. SRGBA244. I think you are on my subscription that's going by your profile. Hello, mate. SMR Trader says, shorted hype at 68, and we are now at the 6-hour 200 EMA that held the trend from the 30s. Uptrend decision point, in my opinion. Take a look at the 6-hour 200 EMA, if it matters or not. I never look at EMAs. I've never bothered with them. I just purely look at the price action. If it has lined up with an EMA, then using that as confluence is great. But I've seen so many people say about moving averages on Bitcoin and it crossing it, and then it comes back down below it, and then suddenly it's no longer valid. So I just stick to horizontals. I just stick to supply and demand. But the level you said was short at 68 and now at 69 that held the trend. I would do it just for you. And you will see how newbie I am with EMAs because I've got no idea. Right, indicators 200 EMA. Was it the EMA you said? Yes. I might have this completely wrong. Is that, I don't know what the fuck that is. Now I've got all this shit. Someone help me out. Help me out. What am I looking for? Do you see what I mean? I've got absolutely no idea. Am I just using that one? EMA cross 5020 200. That probably looks a little bit nicer. I don't know which one's which. I'd have to change all the settings presumably as well. But yeah, it's going from what I'm seeing here. If I just make that blue one like yellow or something, so you can see it. It's coming back under it, right? So that's adding confluence to what we're seeing with the supply and demand levels as well. So yeah, it looks pretty good for my $16 target. Does that help? Take a look. Oh, and it have to be 6-hour 200 EMA. Yeah. Sorry, man. I've got absolutely no idea how to use these things. I've just never used them. I don't even have 6-hour. Yeah, I can't even get that because I'm a cheap bastard and I don't pay for TradingView. So sorry about that, man. But yeah, I'm an absolute noob with that stuff. All right. Any other charts or any other questions? And then I'll move on to the next chapter, which is about how I use risk at different levels. And I've got a really good example, actually. I just can't remember if it's a Solana or Bitcoin from recent history. By the way, even though I've been bear tarded since October, you will notice that my water flask is a big green candle. I am more enjoyable as a bull. I like life better as a bull, even though it's been fun shorting this market. Right, so let me just find this example. I think it might have been Solana. Yeah, let's use this as an example. Let's just remove drawings and then I will add them back. So we have this supply zone. We have this compressed channel. And then we have the extreme of that channel up here. And then, as I alluded to before, the shallow part of that channel down here, which is where the sell-off created the low. So I just want to talk about how I use risk at different levels. And I've been asked to look at ZEC. Yeah, I'll look at that after, mate. How I use risk at different levels in order to catch a trend. So if we've got a trend that's been put in like this, and it's come all the way down here, some of you guys who are subscribed to me will remember that we were looking at this level, we were looking at this level, and we were looking at this level in order to take shorts from. So when price comes up to this level, I'm looking for, this is the shallow part. This is like, if this is the entire swing and this is the first key level, I'm looking for price to move quickly and continue in the trend at that shallow level. It shouldn't have any business back up here if it's going to go. But in this case, obviously it doesn't. So when I'm shorting this point, the most shallow area, I'm using the least amount of risk to build a position, because I know at these shallow areas, we're more likely to get a trap, we're more likely to get a fake out and to move into a higher supply zone, a higher level of resistance. So let's say I want to allocate 1% of risk. I'll be using 0.1% to start building positions down here. And that's, again, because I know there's a likelihood of being faked out. And then what I actually did down here, I built the position once I saw a range that had formed. And when it started breaking down below the range for the first one, there's my first position at 0.1% on my double confirmation. And then we get the second position. If I just zoom in, make it way better. So we have the range that forms, and then on the first breakout, I've got 0.1% here, and it rounds off, and then it comes back down and creates a lower low. So I've added another 0.1% here, and then it's pushed up, and then it's dropped back down. Now I'm adding to get to my 1%. So that was, in this instance, I had to add another 0.8%. And that's my max risk I'm going to use on this shallow area, 1% risk. And then it drops, and then I want to start trailing my stop a bit. So if my stop's up here above the range, I want to start trailing it down as we start getting lower lows, because once we've had the respect of the range, we've had a bit of consolidation, and then we've had another impulse down, very big impulse as well. I want to use this high as my trailed stop area, because again, and as you see, it shouldn't be, if it's bearish, getting above this massive red candle. In the same way, if it's bullish, it shouldn't be getting below here, which it didn't. And then in this case, you can see it did, and it took me out for a smaller loss in this instance. So, and then if we move along, same thing happened again, because I knew there was a likelihood of getting stopped out. Again, adding another range that forms here. I'm adding 0.1% here, and then I think I actually added 0.1% on the break, on the close of this big candle. And then once it broke, I've added in another couple of 0.2%, because I'm starting to see, right, okay, we've had a big rejection. We've obviously already come out of this range before. On another drop of this range, I'm just going to add 0.2%, breaks it, and then puts in this candle, and then I start chasing it. So I've got about my 1% around here. And then again, once it's drops, retraces, and then puts in a drop. I mean, you're looking at this, right? And it should be going, like, this is like the most bearish looking chart, right? We've had two rejections off the highs, lower low, lower low, lower high, massive lower low. At this point, I'm trailing my stop, and then I'm taking basically either a small profit or no harm at all. But I haven't used a massive amount of risk, because again, I had in the back of my mind that we could be coming back a little bit higher. And I didn't add, I think I added a small position here, but ended up getting stopped out for about 0.2% quite quickly because you can see it pushed up. So now when I know we're at a deeper level in the swing, but not the deepest. Remember, the deepest is at 88, and the second deepest I would say is 81. Now I'm going to start adding a little bit more risk. So instead of 1% total risk down here, I might do 2%, I might do 1.5%. Depends on how the price action develops and how strong the move is. But we started seeing some pretty nice signs of breaking down. So we get the range, pushes above the high, comes down below, and then on the second break, that's where I'm starting to add 0.2% rather than 0.1%. And then we get the push up, the spike, the lows, retest the high, and then on this candle here, I start adding again because I'm like, right, there's a big rejection and I'm anticipating it's coming down to create a lower low. So I've added another 0.2 there. And then once it broke through here, I've added the rest of my position on there. In this case was about, I think I added about 1%. So I'm in for about 1.4% on this one. Ideally, then I want to add more. It just so happened to be if my full risk was 2%, I just didn't get it in this time. I would have liked it to come back up one more time and give me a second position, but it didn't. And then over the weekend, I wasn't looking to trade. So we have this range that forms at the lows. And then I'll get enough of a confirmation on this level down here that it's going to break the lows, comes back up. And then last night creates the low, retraces back up. And then once it broke down again, I added another 0.2% here. So I'm in for about 1.4 to 1.5% up here, and then I've added on a continuation another 0.2%. And that's kind of how I add at big swing points, and that's how I start looking at the risk. But in general, that shallow area, I'll be looking for a 1% max risk. And the second level, I'll be looking for a 2%. And then really right up at the extreme, it may even still come up here, right? Right up at the extreme is kind of where the last stand is, because above there, the market structure changes and we start looking bullish. So it's at those areas I know where we're going to get the biggest opportunity. So at this point, I'm going to start looking for about 4 to 5% total risk. And if you've been following me for a while, and if you've been subscribed to me for a while, you'll remember when we took shorts here and then up here as well earlier on in the year, I was adding quite aggressively because it was the deepest part of where price could go. And yeah, if I'm wrong, you're going to have to swallow a bigger loss. But again, I'm adding to it in the same way where price might come up and put the range in. And then once it puts that second low in, that's not drawn properly. So if we put a range like this, and then it breaks out, and then puts a second one, I'm starting to add at this point. I might put a 0.2% here, but then I'm starting, right, okay, let's do it at 0.5, and then look for maybe a retrace higher, and then a rejection again. Then it might be another 0.5 to 1%. And the more it starts building, putting lower highs and lower lows, I'm adding on every lower low up until I get to 4. And then I should be expecting it to completely nuke from that point. And then I'm in at the deepest level with highest, because I know it shouldn't be turning from that point if I'm correct. And if it does, I can start flipping my bias quite easily. Whereas I'm not flipping my bias on these levels because, again, we've got overhead resistance that can knock us back down. So I'm not flipping there. I would flip there. And this is like, if you hear me say, if we get above 68K on Bitcoin, I'll look bullish, for example. If we get back above that 88 level on Solana, I'll start looking for longs. But that's kind of generally how I manage my risk when I'm looking at key swing levels. I'll have an idea in mind of what my max exposure I want that to be. If I'm day trading, I'm looking just a full clip at the right signs, because I'm watching the price action develop and I'm watching the flow, I'm watching the momentum, and I can get kind of a better feel for it. But when I'm swing trading, I feel like I have to build into the positions a little bit more, and I like to use sort of 10 to 20% of my max allocation per level. So here I'm only got 1.5 around there, and I've probably got about 1.7 out of 2% that I want. But I'm not happy with getting continuation levels. I want it all up here. So if this does fail now, I've moved my stops already to above this high. So I would take a small loss on a couple of those, small win on one of them, and then this continuation level will get stopped out for a full 0.2%. But then I know if it comes back up here and ranges again, that's where the killer opportunity is, and that's where I'm going to look for about 4 to 5%, build a 4 to 5% position. Again, not full clip, and just build it sort of like 0.3s, 0.5s. And then when I'm really convinced, I'll just add in like whatever I need. Could be a 1 or 2% position. But where the best opportunity is tends to be where I look to go a little bit heavier, and where I'm a little bit unsure and not really expecting the entire market just to keep ripping down, because that would have been a godsend, you know, if you've got this big retrace, and I expected it to go, and I was in and hoping for that, and getting tagged out of that was quite painful actually, because I really did expect it to go. But experience has taught me that these shallow levels are kind of the levels where you'll get the traps, and then you'll get higher. I've got on my blackboard, I don't know if you can, no, you can't really see it. On my blackboard, I've got deepest retrace levels. I've got 3 swings. So if you're interested, I'll take a picture of it and I'll send it to you. But essentially, the higher it goes in the swing is the better opportunity, and that's where I want to put the most risk. So yeah, I've had a few questions on how I do that. So that's why I've covered that here. Kind of a simple way of looking at it, but that can be, you know, your own, what do you call it? Your own subjective experience on how much you're happy to risk. I've had to build that up over years. And yeah, that's kind of a general rule of thumb that I follow. Okay. Your screen is always cut off on the stream to the left, so we don't see the symbol of the chart ever. It's so annoying. Ah, sorry, mate. I didn't even realize that. I will fix that for the next stream. Although you can sort of see it, and I will improve that. I'm sorry, mate. You can sort of see that here, but yeah, I will change that so I can get that all in. Do you forgive me? Please forgive me. Can you look at ZEC? Yes, I believe I looked at that last week, so my answer is probably going to be the same, because all the what do you call it? TA should be on it still. Was it ZEC I looked at? What's going on here? Okay, let's relook at it then, because I don't remember, unless I've got it somewhere. No. Okay. All right, let's look at ZEC. On the daily time frame, we have a very big swing up. We have what I would call the origin of the move there, because that's where we had the impulse up to create the new swing, the new highs. So that's holding the entire market up. This looks like Bitcoin in 2017 comes up and then just about misses it and comes back up. This feels like kind of like 2021 high sort of thing. Interesting. So up here we have the previous all-time high, which just failed to test the extreme of it. We've got this high here. And then we have a break of it, the retrace, and where the buy-in takes place to test the high, comes back down, bounces off of it, but makes a lower high, and then nukes all the way back down. also, I mean, on Coinbase, it's taken out, it's wicked this low where you would say it's now taken out a lot of liquidity there. And we're going to need to go to H4 now to get more price action. So we have this low, which was the key low. And then we have the supply zone here, which is where the sell-off took place to break that key level and ultimately put this low in. So we know there's a lot of selling interest at this point. Retests it, puts in a lower low, just eyeballing this level. It's not really that important. But it does put in a lower low, and then it retraces all the way back up a bit higher and is now coming back down. So I would say the extreme of this level, using the wick high and then the candle high, is up there and it hasn't yet been tested. Now, if I drop down to H2, I want a little bit more price action to contend with. So we're on a clear uptrend. We have bounced off a resistance. So a lower low wouldn't be that great, but we haven't got one yet. So we have this demand zone, which is where the buying took place to push us up and basically break this high. So locally, it's somewhat important. But that would actually be quite a nice area to start to look to load up on. The reason why I would hesitate is because crypto market looks like it all wants to tumble still. So I wouldn't trust that too. But if you're looking for longs, technically this is a pretty good level to start looking for reversals from, about 480. We have this area here. This is really nice little range that had formed, really clean reversal range that puts the swing on. And that is a reaction to this, which is all kind of reaction. I mean, this is sort of the low here. It could come down as low as 410, which would be also a nice long. But if it takes out this 480 level, I would say on retraces, look for shorts down to that 410 level. The fact that it's still not tested the extreme and put in a new high makes me hesitant to say to look for longs, because I would rather, if I'm looking for longs, I'd rather see that taken out, retrace the key support, and then push up. But it's a pretty clean chart. It's a pretty nice chart. The volume is good. The trend up is good. I would just say, yeah, like that's the current level where this move is being held up by. So I would wait for that personally if I'm looking to trade it. On M30, similar sort of concept here where we have the high and then we have the level here, which is where the buying took place to push up. And then we have the retrace here. So I would say if it doesn't make it down to here and starts pushing up, you could look for shorts at that point on a retrace. But if it takes out that level at 520 and starts trading above it, I would say that this trend will continue up to about 568. So yeah, they're my levels on that chart. I can't really tell you what I expect because I don't know the coin very well. But I would say that if it loses 480, this is going to look like a top for sure. But if it holds it, then I would say it at least has another leg up to about 570 is Zcash. Kilam Rudam. I hope I pronounced that right. What is the psychology behind the compression being a key area? Okay, so compression is basically, let's use Solana. Compression is basically consolidation, right? So we have two areas of compression or consolidation on the chart. Where it's going sideways here is something really nice to see when you're looking for a reversal, because you've got the trend up and then it kind of flatlines and then reverses. Whereas here, where you've got this compressed channel, it's just a bit easier to mark if you've got all of that, which is one zone. right? Because all these lows are just reactions along the chain, and then you have the clear impulse down. If you subscribe to me, if you hit subscribe on X, I have actually got an educational article which I put up last week about compression and about end of chain moves. But essentially, the way that I have learned and the nuances that I have picked up over the years is that if you've got a big zone like this, it's either going to react from the bottom or it's going to react at the extreme. I mean, in this case, it's kind of come here, sort of just below the midpoint. But this is quite a difficult one because you've got the sell-off here, which broke the low. You've got this sell-off here as well. This compression isn't that clean. If you check my YouTube channel, Price Action Strategy for Beginners, Intermediate and Advanced, it will cover this entire concept. If you go on Kraken Crypto Exchange on YouTube, you'll see 5 price action videos which were done by me teaching price action zones and compression. And the idea behind it is that you're going to have 2 major areas of liquidity on a downtrend. So you're going to have it where you've got the trend down here, and then you've got the retrace point where every time it gets tested, price moves back down to create lower lows. So you know that high is the extreme, right? Or if you've got the low, you also know that this is where buying takes place. We know that there's liquidity there, and it's going to find resistance as a flip there to use that liquidity to sell us lower. Or, you know, buys end up like get back to break even, close a position, and then like the market drops as a result. But it just tends to be where the deepest liquidity is to push the market in that direction, or big liquidity to break out of that zone. So we know that's where there's going to be the most interest in taking trades and moving the market. So that's essentially all it is. It's where you expect the bigger orders to be, because it's where the biggest move in price is from. So if you need to have a clean impulse between these areas. So you can see in this particular point, I've marked all of this compression because it's all just reactions. And then you have that small impulse away. And then in the same way, you have this impulse away, which confirms this all as compression. So the psychology or the logic or the story that I've always told myself is exactly that. It's where the biggest areas of liquidity are, and price just kind of gravitates towards them. I like to prefer to move to the extremes. This is why I take smaller risk positions in places where we're not at the extreme, because I've been trapped so many times where this comes down and then continues up to the extreme, and then I get my reversal point. So it's just one of those things, really. There's no real hard and fast rule on it, as you can see, obviously. But a nuance that I've picked up over the years, let's say you've got your big compression here, is that if it's not going to impulse out, or if it comes down and then comes back into that compression, is likely to travel all the way back to the other side. It may not do it in one big fell swoop like that, but as you can see at this point, it kind of dribbled up there. So it's just where there are big areas of liquidity and you can expect the best reactions from, essentially. But yeah, if you take it as from a supply and demand fundamental, if you have a trend in price and then you've got price consolidating, we know in this area that buyers and sellers are at an equilibrium, that they're matched, that the chart isn't moving in one direction until either the buyers or the sellers get overwhelmed. So it's just a lot cleaner when it goes sideways. You can see that balance. In a compression, it's more like you're in a trend and the sellers are still kind of in control, and you can see the direction a little bit more clearly. So they're just big ranges. They're just a little bit more sideways. A little bit more diagonal than they are sideways, but they're essentially the same mechanics behind it. Buyers and sellers more matched when price is going sideways. But when you've got price moving like that in compression, you can see clearly that sellers and buyers are they're fighting. They're more at a balance, but one of them is stronger, and you're getting that clue from the market that you keep getting lower highs and lower lows, and eventually you're going to get the buyers will be completely exhausted, and you'll get the impulse. In the same way that eventually the buyers and sellers will be unmatched, one of them will be overwhelmed, and then price will break out of that range. So it's either you can trade the breakout of the compression or the range, or you can trade the retest of it, knowing that it's an area of buying or selling interest. You know, it's an area of liquidity, and then look to catch the next move. So that's kind of the reason for that. Does that make sense? How do you determine your risk? I mean, stop before scaling into shorts position size. How do you determine your risk? Or do you mean my stop loss or my risk before scaling into shorts position size? Could you rephrase that, please? If it's my risk, then it's just kind of like an arbitrary thing which I've gained over the years, and I'm happy to kind of lose 4 to 5% on a big position. I don't want to. If I use 4 to 5% on a lower position, for example, a lower level, for example, then you mean the position size? Yeah. Yeah, like I said, like 1% is just like a bit of an arbitrary number. I don't mind losing 1%. It doesn't really hurt that much. 2% is uncomfortable, but it doesn't really hurt that much. 4 to 5% is like a big chunk, but also the payoff is really big. So like this chart, for example, now, if I had got in at 4 to 5% here, and this now drops down to where I think it can, about 64, or just these range lows, I could end up getting like a 5-6R trade there and end up adding like 20 odd percent to my account. And then building up to that position, if I take like a 1% here and a 2% there, it doesn't hurt as much, because I know if I get the big one, then yeah, you know, it might be 25, 30% that I've gained on the account, and I've only taken like 3%. Whereas if I'm adding 4 to 5 here, or 4 to 5 there, I could be down 10 to 15% before I've even got the trade I should have taken, and then that eats a chunk of profits. It fucks me head up as well when you're in the trade, because you want to cut it a little bit looser, especially when it starts like trading against you. You might think, oh fuck, I might as well just close this. So it's just a bit of an arbitrary number, basically, built on experience, built on what I know I can tolerate. But also, like, when I've got high conviction in a trend, as I have done in crypto since October, when you get those lower highs at key areas, I'm happy just to like start building a little bit heavier. Does that help? Does that make sense? Right. If it does, cool. I'm going to move on to the last section, which is about how to use prop firms, or how I use them at least, within my trading portfolio. So as we sort of come to the end of the bear market, and as we're going to start building for the bull market, I think a good way to do things is how I do things. So let's see. I don't need much time on this really, but I want to talk about it. So one, also, just to reiterate, I'm now partnered with Hyrotrader. If you want 10% off all challenges, go on hyrotrader.com, use code TRADERMATT. If you subscribe to me on X as well, you'll get access to my Discord, and I'll be available to help you through those challenges as well, and give more tips and tricks on how I do things. So one, the main priority that you should have for your trading portfolio, in my opinion, is an investment account. So that could be spot holdings in crypto. It could be stocks. It could be whatever, right? But that one should be your main account, in my opinion, because if you're holding something for the long term, you're not going to put as much sort of day-to-day headspace into it, because you know you're looking to grow that over the long term. So you're not micromanaging positions, you're not taking multiple positions trying to grow it. You're getting into something to hold for a certain period of time, and you're adding into that account along the way to grow that. If you've got income from other sources, for example, that should be the thing that you focus on the most before trading accounts, before anything that you're looking to do in terms of adding risk and gambling. You should have an investment account where you're never going to be safe entirely with investments, right? But if you've got a good eye for Bitcoin, for example, and you're down, like the chart's 60% down, and you trust that in 3 years it's going to be up 200, 300, 400%, you can add to it. You can dollar cost average into it, and you can just kind of leave it alone, right? And that usually will always outperform all of your trading accounts combined, unless of course you're like, if you're consciously taking trades to grow an account. Investment accounts usually, for most people, are always going to outperform, in which case it makes most sense to have that as the main focus, right? Of course, you might do some gambling on memes and stuff, but that doesn't really count as like conscious effort. I think it's just gambling. So the way that I do things with my crypto, 90% Bitcoin, 10% everything else. Because I'm Bitcoin maxi. I have been in Bitcoin since 2017. I know it very well. I'm always looking at the charts, and I have lost a ridiculous amount of Bitcoin selling it and chasing altcoins, chasing meme coins. And I've just learned over the years that if I've got, let's say you've got 10 grand, 90% of that in Bitcoin, and leaving that is going to outperform most likely the £1,000 that you spend elsewhere, or the $1,000 or whatever. So that's kind of how I look to that. I'm looking to get into stocks more from next year, but I want my main allocation to be in crypto like that. And then I'll have, once I'm happy with my spot holdings, I'll have a stock portfolio over here that I will put money in elsewhere. So in my opinion, that should be everyone's number one focus, is to have an investment account, spot holdings that you're looking to grow over the long term in coins that have a high likelihood of increasing in the next bull market. So they're going to be things like Bitcoin, where obviously it's like the king, Ethereum, which is king of the shit coins, but it's still surviving every cycle, and it's not guaranteed, but it's a very high likelihood that it's going to end up running up to the highs again, or at least 50% of the highs, or whatever. Hyperliquid, as we talked about. Solana, I'm not really that interested in, but that should be everyone's main focus, in my opinion, right? Number 2, personal trading account. I think most people now that have come into trading, especially over the past 4 or 5 years, if you've been trading less than 5 years, I think that the view of trading is completely different. Everyone's kind of looking at prop firms as trading, and with prop firms comes a lot of rules. It comes with stupid things like slippage that they do on the other end, looking at you, my Forex funds. And with a personal trading account, you've got no restrictions. You can do whatever the fuck you want, and as long as you're with a reputable broker, mine is IC Markets, then you have no issues with withdrawing. You have no issues with increasing that account, and it just gives you total freedom to try things. Gives you total freedom to mess around with risk. Sometimes, I've taken trades at like 30-40% risk before, which I would never be able to do on a prop firm account, right? But you can do that on a personal trading account. But that gives you a better idea of how trading actually is, and it also gives you a better idea of how you trade, because with prop firms, they will give you a false sense of ability, and I've seen this so much, right? People will plunge like 10 grand into a load of challenges and lose, and then they'll go and get a payout that's like 3 grand, and then they'll post it online, yeah, I got my payout, blah blah blah. But it's very easy to lose track of what your actual net profit is with prop firms because of your challenges that you blow, because the payouts are difficult to get. So I always think you should be trading a personal trading account first and foremost when you're trading. And that should be your main focus. And the focus of the personal trading account should be to grow it in the long term. One of the big things that I've been trading since 2015, right? One of the biggest challenges for traders, for retail traders, has always been, if you've got a personal trading account, how the fuck do you grow it, and how do you withdraw profits from it to live off of it at the same time? And it's very, very difficult, because once you let's say you start off with a couple of grand and then you end up getting to a 5-figure trading account, you're going to want to protect some of that. You're going to want to take some of it out. You're going to want to reward your performance. I think you should always be looking to reward your performance in trading, because it gives you dopamine and reference points to know that you can actually do it. And it sucks when you get really greedy and you blow the profits and you're stuck there with your dick in your hand going, oh, fucking, I should have done this, I should have done that. But the personal trading account nowadays, obviously we're going to look into prop firms, the personal trading account should be something that you grow in the long term. And it keeps track of your score basically over the years of how you're doing. And you can look back to certain periods of time in your life, especially if you've got your journal, and see what you were doing right or see what you were doing wrong, see how you corrected behavior, see how you've got into a slump and then how you've got out of it. But with a lot of prop firms, for example, you're not going to have that information, because if you lose the account, you kind of just like fucked it off and you don't care about it. You discount it in your mind as something that didn't happen. And again, it gives you that kind of false sense of your ability, whether good or bad. You might think you're actually worse than you are. Like, for example, with most two-step trading challenges with prop firms, you have to pass 10% to get in past phase 1. Then you have to do another 5% to pass phase 2, and then you get the live account. That's 15% you've made just to pass, and then you might lose the account and think, oh, I'm fucking useless. But then losing that account, more often than not, it's like 10%. So you're still up. If, let's say it's a 2-month process, you're still up within those 2 months 5%, but you're going to feel really shitty because you've passed phase 1, you've passed phase 2, and then you lose the account. And that makes you feel worse. That makes you feel like you can't do it. But if you're doing that on your personal trading account, you'll be able to see that P&L way better. It's like right there in front of you, isn't it? But these days, because of all the prop firms and different opportunities people have got, you can grow your personal trading account alongside your investment account, and you don't have to touch it because you've got other ways to withdraw money. But the personal trading account, like I said, is no rules, no restrictions. You can grow it in the long term. You can add to it as well, which is a really big thing. You can withdraw from it if you really need to. But I think for the sake of tracking your progress as a trader, you should be having a personal trading account alongside your investment account, and that should be your main focus, really, because that's what you're going to be growing from. And this is where the prop firms come in. This is like, honestly, I think it's one of the best things for the industry. You should be trading prop firms month to month for payouts, right? So your main idea is to grow your investment account and grow your personal trading account. If you listen to any guys that have done very well with prop firms, they all say the idea is to make a lot of money from the prop firms and then withdraw it into a personal account. But even then, they're still trading prop firms because there's less risk, there's less capital risk and less risk of blowout and liquidating everything, because the risk has then been put on the simulated account, right? So for the prop firms, the month-to-month payouts, let's say you have a 100K account and you make 1.5 to 2% a month, which is actually really, like, it is difficult, but it is actually really achievable to do that. And you've got like a couple of grand a month just on that kind of percentage. And then obviously if you scale it, you can lower the risk and make more money. But if you go through a drawdown period, you're not gonna feel great being in drawdown, because it affects your brain, it affects your mentality, it affects kind of like how you look at things. If you've ran that up to like 5-6% in profits, you're gonna have to pay yourself, because you never know what's gonna happen the next month, and you don't want to lose those accounts, and you don't really want to be in a position where you have to fund the next challenge when you might have 4 or 5 grand sitting there that you could withdraw. So my focus with prop firms, I trade with FTMO, and now obviously I'm with Hyrotrader as well for crypto. My strategy with them is to withdraw profits from them month to month, and use that whether I want to live off of it, whether I want to buy something off of it, or I want to funnel it into my personal trading account, or I want to funnel it into my investment account, or I just want to maybe buy more challenges and look to scale it. I've got month-to-month payouts from the prop firm, which kind of pays for my lifestyle without having to withdraw from the personal trading account, so I can keep that growing, so that eventually the money that I have with the prop firms, or the capital that I have available to trade with the prop firms, is going to be equal with my personal trading account. So suddenly that takes the need away for the prop firms. But for every retail trader, for everyone that's kind of looking to be profitable and looking to be able to withdraw money from trading, the best way to do it is with prop firms. Because if you do lose the account, then you just buy another one, you go through the challenges again. But I think you should always be scaling. I think you should always be looking to add accounts in case you lose one, and then you've got another one to keep you going. Even if it's a 5 grand account, even if it's a 10, 20 grand account, it can be life changing depending on where you are in the world. But even if, like, let's say you're in the West, and an average salary might be 2 grand a month, for example. Even if you're adding, let's say you've got a 5 grand account, and you're adding like a couple of £100 a month, that can actually make quite a big difference, especially if you audit your finances. You might see that the food bills have gone up recently, or you might have different bills that you need to pay, and it just relieves a little bit of pressure. They can be massive, just for like actually changing your life, without the whole, oh, I've made it, and like I've got a Lambo now and everything. The more realistic and achievable way to improve your life is actually just adding a few £100 to start with. Prop firms are a great way to do that without taking money out of your personal trading account. You can have multiple personal trading accounts, right? I've got my main one with my FX broker, IC Markets, but then I've got a crypto account as well, where I can just like fart around in that if I want. I'm not looking to grow my crypto account like I'm looking to grow my personal trading account, because most of my investment's in crypto. So I'd be just looking to funnel that. But you can have as many personal trading accounts as you want, and look to grow that. But I personally think if you're month to month looking to live off of trading, prop firms are the way to go. And then you use those profits to funnel into your personal trading account, or your investment account, or savings account, and look that way to be a trader month to month. And then eventually you're going to get good enough with that. Eventually you're going to get enough payouts where you can scale it and start feeling good about your personal trading account, and maybe make the switch just more personal. But that's how I think, in priority order, you should be doing things, especially going forward. So yeah, there's going to be a lot more prop firm content from me going forwards, obviously, because I'm with Hyrotrader now. Use code TRADERMATT for 10% discount on hyrotrader.com on all challenges. But I have been trading them since end of 2020 for about 6 years now. Main actually got me interested in them. Obviously, he's now got Breakout. And I started with FTMO because of him. And I've never looked back, because it was actually really transformative. Because especially if you've got a big trade, like a big swing trade on your personal trading account, as you guys know, I've been short Bitcoin from 110K. And if I was doing that on a prop firm account, the fees and the swap and everything would be ridiculous. I can't sit in like a months long position on a prop firm account, but I can do that on my personal trading account and still take money month to month with the prop. So that's how I look to it. Has anyone got anything to add to that, or any questions? But that's how I think, like, you've got a really efficient way of having a trading portfolio going forward. Okay. I think that'll do us. I think that will end us for the night. So, to recap, everything's looking bearish as fuck, which probably means we're going to pump. But yeah, just sitting and chilling in shorts now. Hopefully this will run through for the rest of the week. And then if you want to join Hyrotrader, I'll put a link in the description on YouTube, or you can go over to hyrotrader.com and use code TRADERMATT for 10% off. You can subscribe to me on X. You'll get daily videos and articles as market reviews and trade plans. So I do the public ones on Monday, and then Tuesday to Friday, every morning, every evening, I do market review and trade plans for Bitcoin, Ethereum, Solana, and Hype in a video and written format. Get weekly education, and obviously you get the Discord access as well. So a lot of value for $30 a month with that subscription. Otherwise, I will see you guys when I see you. I've got Jip Molinar coming on stream on Wednesday. Former pro footballer, is now trader. Dutch guy, really looking forward to talking to him. So I'll see you there for that. Otherwise, I'll see you guys on X throughout the week. Happy trading week. Do you use lower leverage on your prop account versus your personal? Yes, that's a good question. I use typically per position on my prop accounts, I use like 0.2%. So where I've said before about using 1, 2, and 4% risk, that's normally my personal account. I kind of like third to half it for my prop account, because I've only got like a 10% account drawdown before I lose it, or 5% on the day. So yeah, I've learned the hard way over the years with prop accounts to use lower risk and add more accounts, so that, let's say I'm using 0.2% risk per trade static. If I've got a 100K account, that's using $200 per trade. But then if I can scale that up to $400,000 with FTMO, for example, so I'm using $800 a trade without putting max, like a lot of risk on. So yeah, I use lower risk size. The leverage doesn't really matter, but yeah, I use lower risk size on the prop versus the personal account. I forgot to say that. So good question. Thank you. Anything else? Otherwise, I will cut it here. We've been doing an hour and a half, and enjoy the rest of your evening. Cool. Any other questions, then let me know by DMs or in Discord, and I'll get to it then. Thank you for tuning in. Thank you for your questions. Generally, I really appreciate it. It helps make these streams better. And I will catch you guys next week if you're just here for the streams. Otherwise, I'll see you in the week on X.